The Real Investment Show.
So one of the other things that, we've kind of been, not talking about as of late, something that we, need to ultimately focus on is China. Because China has a big impact in terms of their monetary policy. Obviously, giant trade partner to the U.S., $50 billion. Quarterly, and it's just a huge trade partner to the U.S. in terms of imports and exports, and so goes China. So goes an impact on domestic markets, etc. So the question has become: China's got lots of problems going on right now, and stuff that we talked about years ago has come home to roost, right? You remember a few years ago, we were here on the show, and this is 7 years ago now. And we were talking about how they were building these replica cities of the U.S., and they were building a kind of a replica of New York and replicas of other cities, and they were building these entire cities like literally overnight. It was amazing how fast they could build these things, but they were empty. Right? There was like nobody living there. Remember, there was this whole thesis that you have, all these millions, hundreds of millions of people that live out in kind of the China farmland, so to speak. And all these poor Chinese were going to move into the cities and become productive cities, and China was going to dominate the world because you're going to have this mass migration in the cities. And it didn't happen. They were building, these massive transit systems that nobody was using. So they were just spending trillions and trillions of dollars to have economic activity, right? But nobody used it. So it gave this artificial growth to China, and this was the big story, right? China's going to take over the world. It's, a whole 9 yards. And now we're seeing some of the ramifications. Evergrande, the big real estate company, is on the verge of bankruptcy. Lots of other problems economically within China. And China has to keep coming in and doing these monetary bailouts to try to keep the economy going. Now, they're going to continue to do this, right? State-run economy. So China's just going to say, hey, you're going to do this and you're going to do that. And that's how you make the economy work. So, when you have that much control over your economy, the government gets to control everything, right? And this is a lot of the way we're moving in the United States now, right? The administration wants more and more and more control. And this is not just the current. This has been current, administrations have been pushing for more and more control over the economy. Stuff that belongs to the states, Department of Education, energy, those type of things have all been transferred to the power of the federal government. So again, control gives you better control over the economy. This is what China wants, and China has. But China's now gotten itself in, and the problem with the policies, they're fine, right? This is always the beauty of communism and the beauty of socialism and these type of things. In theory, it's great. It just doesn't ever work out that way because of human nature. So now China's got a problem. All this stuff that they did has basically kind of backfired, which basic economics was going to tell you was going to happen. But, at the time, nobody believed it would, but here we are. But this has an impact on the global economy, has an impact on us, has an impact on our economy, has an impact on the global economy. So China is at this kind of this center point of the global economy, and everybody's looking to China to do a whatever it takes policy move. Kind of the Federal Reserve mantra, right? The ECB mantra. We're going to do whatever it takes to bail out the economy. Now, let me just ask you a question, my friends. Is that really the economy that we want? do we really want a whatever it takes monetary policy economy? Because it hasn't really worked. It's certainly bifurcated the wealth and the power structures within the economy. It's certainly driven a giant wedge between economies. So in theory, this whatever it takes type of move by central bankers to bail out the economy, certainly, it kept the economy out of a recession, but is that such a bad thing? We've talked about before, is it really a bad thing to have a recession? See, we're so worried about recessions, but are they a bad thing? Forest fires, right? We've talked about this before. Forest fires, terrible thing. Actually healthy for the forest, right? Gets rid of all the underbrush, allows better oxygen, fertilizes the soil with nutrients from the carbon and everything else that occurs. Forest fire is terrible, but not for the forest. Hurricanes are bad, right? Got a hurricane going into Florida. We've had hurricanes here in Houston, Texas, everywhere else. Hurricanes are terrible, right? Cause a lot of devastation. Terrible. Then we rebuild. So, do we really want the avoidance of all the bad things? Do we really want the avoidance of a recession? Yes, recessions are terrible. People lose their jobs, they lose their house, markets fall, asset prices decline. It's bad. Don't want that. We don't want that recession, but is it really a bad thing? I was reading an article, an example the other day, said that baby boomers are the luckiest generation alive. Baby boomers born between 1946 and 1965. They're the luckiest generation alive. Why are they the luckiest generation alive? Because the market has compounded by 14% on average from 1980 to 2000. They just had a strip of unprecedented growth in the financial markets, making them the wealthiest generation on the planet. Lucky SOBs, those are. Nobody talks about what they went through to get there. You had a 20-year bear market with a negative 10% annualized rate of return in the 60s and 70s. You had surging rates of inflation, lackluster, back-to-back recessions in the late 70s. And they had no debt to speak of, no deficits. We started 1980 at 5 times valuations with a 5% dividend yield on stocks. I mean, it was a perfect moment in time where you had high inflation, high economic growth that was falling. Inflation and interest rates were high and falling. Economic growth was strong. It was also falling, but it was still strong. And super low valuations with high dividend yields. It was the perfect environment for money to grow. You could put money in a money market account and 3x your money over time. So yeah, they were lucky. But they had to go through a bunch of crap to get there. I mean, that's the point, right? And so when we take a look at this trying to avoid a recession, right? What do recessions do? They cleanse the economy. They reduce the debt through default bankruptcies. And yeah, I'm sorry, banks. You can't get bailed out. You got yourself in this situation, you have to get yourself out of it. Earnings are going to decline. People are going to lose their jobs. The economy is going to slow down. Valuations are going to fall. And yes, you cleanse that system. Just like a forest fire cleanses the forest, the recession cleanses the economic environment, giving everyone a better opportunity to grow with a more equal distribution of growth in the economy, rather than this lopsided growth of the economy due to low interest rates that only benefit those with a lot of assets to invest. And if it's not apparent by now that after 15 years of doing this nonsense, and really we can go back, to the late 90s when we started this stuff, if it's not apparent by now that trying to avoid recessions is not a good thing, I don't know when we're going to learn the lesson. But we keep trying to figure out all new ways to avoid those recession rights, all new types of policies. We're going to send checks to households. We're going to do MMT. We're going to do all this stuff because we don't want a recession. And the economic outcomes are always the same. It just creates a bigger division in the country, a bigger gap between the rich and the poor, and nothing really gets better. We just get further into debt. But hey, let's just keep doing the same thing over and over again, hoping for a different result, right? But this all comes down to, what we talked about at the beginning, right? It's the political choices we make. It's who we vote for, who we put into office. It's who we drive. It's the things that we follow, the things that we believe that lead to these outcomes. But at some point, you just got to accept the fact that you need a good recession. China's still trying to avoid it. Just like the ECB, just like the US, China's no different. Is this a time that China's going to step up and do more of the whatever it takes to try to bail out their economy? Maybe that'll benefit ours for a little while longer. Maybe. But it seems to me at some point, we've got to make the decision to just let the chips fall where they may. Deal with the consequences and come out stronger on the other side. That wraps up the show for the day. Be back tomorrow. Have a great day.